Hello Trader Planet, this is Matt Golden here, and I'm going to be making another video demonstrating how you can use the Larry Williams indicators for VantagePoint, combine that with the VantagePoint intermarket analysis software to really help you get much better results. Now, specifically in this video, I'm going to focus on shorter term Forex trading. A big part of, if you look at the previous videos that I've made of using the Larry Williams indicators, is using both the electronic market accumulation index with the professional sentiment index to find these major market tops and bottoms that are coming into the market. But there are some times where there is no divergence in our electronic market accumulation index, so that really large smart money buyers aren't really aggressively coming in and out of the market. And what we can do in those sorts of periods of time is rely more heavily on the Williams Professional Sentiment Index and combine that with VantagePoint tools to really help us point us in the right direction on what currencies we should be trying to trade. Now, another aspect to this is that I really like using the currency futures, so actually the futures contracts, to really just focus on a specific currency. So once you've identified where the strength or weaknesses are in a specific currency, then take that over to the Forex market, whether you're going to trade the majors or trade the cross pairs, and really fine-tuning, pairing that strongest currency in the market against, what looks the absolute weakest, so you can take advantage of the spread and the difference between the two. But how this approach works is very straightforward, and it's important to remember that with the Williams Professional Sentiment Index, even when we use that with the market accumulation index, we're using it for two important things: to really confirm that we have this strong move coming into the market, but also to warn us of the retracements. Because let's say we're long a market because we got that double bullish condition met on the Williams indicators. If the PSI gets bearish, that's warning us to go ahead and take profit on a position, that there's going to be some sellers coming into the market. And so we're using that in a very similar fashion, but to make shorter term trades, relying more heavily on that PSI and specifically the neural index from VantagePoint. But if we look here, let's look at the bottom of our screen, and here's the Williams Professional Sentiment Index. It runs from a 0 scale all the way up to 100, so it's a percentage basis is how you can think of it. And above 80 is your exceptionally bullish condition. Below 20 would be your exceptionally bearish condition. And how I like to use this is, if you have a situation where the PSI has recently just hit above 80 or below 20, that signal is going to last for a couple weeks. Consider that bullish signal really valid for a couple weeks after that time period, and simply waiting on VantagePoint to give you that neural index. So it's very possible that the neural index will have to change from one position to another position and say, okay, now you can go ahead and start looking to actually enter this market, whether it be long or short. Now, I'm going to look more specifically at just the trades that have really been the past couple weeks in the Forex markets that we should be focusing on. But you see here, the only time period in Aussie here that the PSI was above 80 was back here, back at the beginning of June, and we see we got this really nice rally up to that 94.50 level. But let's look a little bit more. British pound, same thing, got bullish way back here, and we got a nice rally. But let's look at the Canadian dollar here. Now, this has been very recently, we've had our PSI move down to a 15. So that's our bearish condition that says, if we're long the Canadian dollar from the trades we took several months ago, let's go ahead and really tighten up those stops, be cautious here. Or look to go ahead and get out of the market near the VantagePoint predicted highs if that's the case. Or essentially, if we're doing that, you can also look to short the market from the VantagePoint predicted highs once VantagePoint gives us the go-ahead. And we see here that the neural index was strongly at a 1, so we had this conflict with our indicators, but this indicator is going to hold up for a couple weeks. So since that hit negative, we know that if the neural index goes down to a 0 as well, that's a good short-term opportunity here. So we see that the Canadian dollar index on July 2nd, really a double confirmation for a short-term weakness here. Neural index from a 1 down to a 0 right after our PSI condition got bearish. And we see that what happens here is the market trades up to the VantagePoint predicted highs, and then completely sells off. So just this really nice move in the Canadian dollar futures over the past couple weeks, but this is some weakness that we could have very clearly identified in the market, knowing we would really want to be short the Canadian dollar over this time period. Definitely not the area that we want to be getting long, but let's just keep that in mind. From the beginning of July, possibly looking to short the Canadian dollar. Let's look at some other markets though and see where our best opportunities would be. Same thing here in euro. The euro down here, moving down to the 10 level, so very bearish condition. Our Neural Index moving from a 1 to a 0, telling us that same date, July 3rd, the shorts are on here for the euro, and that trade so far has moved down about $1,100 on the futures contracts. I'm actually going to go look at the actual Forex pairs in a second here, but that's another condition. So we knew that Canadian dollar and the euro were both very bearish rather on July 3rd. Moving forward, looking at the yen. No strong signals here on the yen. We had a bullish condition all the way back here at the beginning of June, and we got that rally higher, but nothing recently. So not really trading the yen over the past couple of weeks. Swiss franc, very similar to the euro here. Bearish condition on PSI. We're going to get that Neural Index moving down, and July 3rd shorting there as well. And looking at the dollar index, which is really the most important thing for Forex trading, we have our professional sentiment index up at an 83. And it's the same thing. July 3rd is really when all this strength started to come into the market, and this is where we can go ahead and start getting long. We know that the dollar index has moved up even higher. So taking that information, though, we can look at the specifically the Forex market to make these sorts of determinations, and we see that we really have the exact same sort of picture of knowing that the US dollar, sure, it's moving down, but our professional sentiment is very bullish. Not only that, but we get this Neural Index moving up to a 1, and that really spots the trend reversal for us. This is the lowest day here on the US dollar Canadian dollar pair, and that's over 100 pip move we can catch on that pair, and the market really doesn't push against us whatsoever. If we look a little forward here, though, we can see that now our PSI condition is bearish. And so what that's telling you is, look, possibly take some profit on this 112 pip move. Definitely tighten your stops up to your entry at 106.50. If the trend continues higher, well, you'll make a lot of money. If the market comes down and stops you out, you're still going to make a little bit of money. But you really identified that if you want to, as a short-term trader, start getting long, July 3rd was really the time to do that, playing off that US dollar strength and seeing the same thing in the Canadian dollar futures. And then we can even look at the euro as well. We're going to have the very same situation here where June 2nd comes up. We get our Neural Index down at a 0. You see our PSI doing exactly what we want it to. And we can start taking these positions short the market on June 3rd, and you see that everything really confirms itself. That if we were really aggressive and took these short positions when we had that trade set up there, our crossover comes to the downside, and now we've seen that weakness that we've got in the euro telling us to go ahead and, at this point you can lock in your stops, trail the market down, and if the market keeps continuing lower, well, you're going to make a lot of money. If you're a day trader, you've been coming in short at all these time periods, at 106.50, at 106, and making money to the downside on shorter term opportunities as well. One more thing that I'd really love to point out here is that back at the beginning of July, we were able to identify weakness in the euro and the Canadian dollar. And so what this can do is actually help us not make careless mistakes here of, in my opinion, what would be trying to trade the euro Canadian dollar. And so while in the cross pair it looks like, okay, well, our PSI got bullish, our Neural Index got up, it looks like a good opportunity. Why would, knowing what we see in the futures markets, want to go trade essentially a weak currency against another weak currency? That's not really what we want to be doing. We want to find these very strong currencies like the US dollar index that's showing some bullishness, pair that against the CAD, pair that against the euro, and focus on those opportunities, because that's where we're really going to make a lot more money with our trading and not really get caught up in these cross pairs, which really can't make us a lot of money at certain times and are just bound to go sideways if both currencies are going to underperform at the same time. So I hope this helps anybody. If you trade short term, definitely look at the Williams Professional Sentiment Index. When you pair it with VantagePoint to really just give you that clue of, okay, Neural Index has moved from a 0 to a 1. Now the trade is on. It can definitely help you make much better trading decisions and also help you get extremely early entries on longer term trends. So you can take those little day trades where you were maybe running tighter stops and turn into trades where you really capture a really impressive move in the market and hundreds of pips to the downside or upside, depending on how you're trading. So if you have any questions about this, feel free to go ahead and contact Market Technologies. They can give you a live demonstration of this approach and really help you understand exactly how this can help you if you're a short-term trader, or if you want to capture specifically just the longer term moves and rely heavily on the market accumulation index and that other Williams indicator that I cover in my other videos. So I hope this helps everybody. Have a great trading week, and thanks for watching, guys. Bye.